it looks like we've got another pro value day. And in many ways, this is to be expected. In the last few months and years, indeed, we've seen a prolonged period of growth outperformance. And actually, you've had relatively extreme investor positioning going into this. But for us as a long-term investor, it doesn't particularly move the needle, whether a vaccine comes in December this year or the first half of next year. A vaccine in itself won't make bad companies good companies overnight, and vice versa. So as a growth investor, COVID has actually dramatically accelerated the opportunity for many of these digitally minded growth companies. And actually, I think there are aspects of consumer behavior and trends that will stay here forever. And many of these play into growth companies. So I think, yes, you might see this value relief rally, but actually, ultimately, we're in a far better place for growth stocks today than we were 12 months ago.
Marcus, everything above, I totally understand what you're saying. Good morning to you, by the way. But the entry point really does matter when you are seeing such violence, especially in those growth stocks as well. I mean, some extreme valuation moves. I mean, of course, particularly the Chinese technology stocks, but elsewhere as well. Are you tempted to just hold off a little bit until this phase of aggressive rotation ends before adding to your portfolio? Or again, is it really just doesn't matter about your entry point at the moment, regardless of that violence?
I think the violence is always interesting to watch, and it will throw up some interesting opportunities. So we need to sit on the sidelines here and be selective with our approach. But ultimately, as said, yes, you've seen some very big moves, particularly in some of those technology stocks that you referenced in the last 12 months. But actually, the opportunity for these companies is far, far greater. Many of them have been able to expand their market share, an addressable market, to often quite different cohorts of customers than they would ever been able to do in normal circumstances. So I think that has to be reflected in valuations. And most investors are so focused on the valuation multiples of this year that actually they underestimate the valuation upside of these companies that can compound that growth over not just the next year or two, but 5 or 10 years.